A strong rental yield is one of the keys to growing a property portfolio. In this episode, I'm going to reveal Australia's top 8 rental yield locations with growth potential in 2024. So which investment locations in Australia will pay you the most rental income? Stick around to the end where I'll be sharing 2 bonus areas that I've only shared with clients on locations that are high yielding with growth prospects for 2024. So with area number 1, before I jump into it, I think what we should also talk about is high yielding suburbs and what the lists are that you traditionally see versus the list that you're getting today. The lists that you traditionally see are out there with purely just what they are, high yields. And that ends up meaning that you're probably going to be thrown in an area where house prices are 100 to 200K. The economy that's there, the economic environment that's there is probably little to nothing in terms of diversity. And also it might be very volatile as an industry town with a small population base. And so you're like, look, cool story, high yields, but what am I really doing with this? I thought we'd do something a little bit different today where we get yields that are high, but we also get locations with some pretty good growth prospects. Now, whether these locations sit well in your portfolio or don't, that's for you to decide in the numbers and trends that you see. But in terms of them having growth prospects as well as high yields, as well as affordability, I know that's quite high up on many people's radar. So area number 1, let's jump in. We're going to the city of Townsville. And the city of Townsville, actually, I could have made the city of Townsville a top 5 alone out of the 10, but I didn't. I got some diversity. I got some in Townsville, some in some other areas, so you can share the love across the nation. Now, the city of Townsville, there is a suburb called Heatley. Now, Heatley has a median price at around $340,000. But with Heatley, the rental yield here is a staggering 6.9%. Now, vacancy rates are also tight here at about 1.2%, which is still very tight. It's not obviously the below 1% we've seen around many parts of the nation, but it's still a healthy number. Now, with the vacancy rates, they were 1.5% a year ago, so they've actually gotten tighter and they've gone from low to even lower. Now, this particular suburb also has low levels of housing inventory, and there is strength when it comes to the cycle of Townsville and the price growth occurring. Now, there are multiple other parts of Townsville too, but this just gives you one that just is an example of high yields and growth prospects and affordability with vacancy rates that have not fluctuated. Let's go into suburb number 2. So the suburb number 2, I'm taking you out to WA. Now in WA, there's a suburb called Carey Park. This is in the region of Bundaberg. Now with Carey Park, this has a median price of $350,000. It's also got a rental yield of a huge 7%. And then vacancy rates are 0.4%. But guess what? Last year's vacancy rates were also 0.4%. So you've got tight rental data last year and now with high yields, affordable pricing, and we all know where WA's cycle position is. Now, I have some thoughts on WA and the diversity aspect. I'm not saying it's not going to grow. It's just more so awareness that you should have about having a market in WA in your portfolio. So that's something to be aware of. And if you've got a diverse portfolio, then hey, numbers that are showing like they are in Carey Park are definitely very strong. Over for number 3. Number 3, we're going back to Townsville. And as I mentioned before, we could have made Townsville a top 5 out of the top 10, but I wanted to get some diversity and just chuck in a few in there for your liking. The next one is Condon. Condon over here, and by the way, Condon with an N on the end. I didn't say it the other way, so guys, don't hold me up for that. But we're talking Townsville, and we're talking $340,000 median price with 6.7% rental yields and vacancy rates of 0.8%. Now, again, last year, vacancy rates were also 0.8% here, which means it's not just a tight rental market out of nowhere. It's remained tight, high yield, affordable, and with growth prospects. And I'm going to be saying that again and again, high yield, affordable growth prospects, because if you have growth prospects around the nation and across the nation, there are areas with growth prospects that are long-term pretty similar, which is the case for most of the country. In case that's surprising, it shouldn't be. Most of the country does fairly well over extreme long periods of time. But in the short-term period, cities can outperform. So if you're targeting cities with growth potential and they're likely to outperform, but then you're also getting high yields within that, that's exactly what you want. And then you're able to not only have the high yields to minimize the losses during high interest rate periods, but remember, when interest rates come back down and vacancy rates are as tight as they are, those rents will go up even further. And whilst the yield for new people will be less because more people are attracted into the market, for those people who purchased when the yields were high and interest rates were high, their yield on purchase, which means rents rise but the purchase price stays the same indefinitely for as long as you hold it, that increases. And that's the number you want to have keep going up. Whilst interest rates go down, double win. That's the key. So that's why this list is actually very important. But if we go to the next one, we're traveling over to Bundaberg now, and that's the suburb of Walkervale. Now, Walkervale, I could be mistaken, but for Bundy locals, I remember there being an epic restaurant I went to there. I think it's called Water Street Kitchen. So shout out to you guys there at Bundy. Water Street Kitchen is very good, and it's crazy how it's such a good restaurant amongst like very, very affordable properties around, which is very cool. But Bundaberg, 410K median price here in Walkervale with rental yields of 6.5%, vacancy rates at 0.9% now and 0.6% the year prior. So a little bit of an uptick in vacancy rates, but extremely tight nonetheless. And this is one of the few that had yields in the sixes percent-wise, but price in the fours. And that's an interesting thing that's starting to come up with Bundaberg. Many people might be wondering, is the cycle over in Bundaberg? Past growth would suggest it is, but data points are not suggesting it because rental yields have risen and kept it very competitive for investors to still be active and grow in terms of their cash flow. Prices are still affordable. You have cities that have had suburbs where there were 200,000-300,000 grew to 400,000, but they're still affordable for locals and for interstate investing. And the rental markets are extremely tight, whilst housing listings are 30% plus, depending on the suburb, below 2019 levels. So less listings, less construction, less vacancy, affordability, high yields. Investors have no reason to disappear from that market, even though the growth has been high. No wonder why it still grew so well in 2023 and started off 2024 with some strong growth as well. But back to this list, we now go over to the suburb of Frenchville. So Frenchville is a very popular suburb in the city of Rockhampton. So guys, I've given you 4 cities already, so I hope you're enjoying this gold. $460,000 median price with 6.3% rental yields and 1% vacancy rates, up slightly from 0.6%. So that's another key point to recognize. Vacancy rates can fluctuate within a tight number. So if you're 0.2, 0.4, 0.8, 1%, 1.2, it's not really the biggest difference makers. Where the difference is large is when you might be at a 0.6 or an 8 at one point, and all of a sudden you get back up to like 2% levels. That to me would say a trend is truly changing, and that's a trend to look out for. That is Frenchville. Rockhampton is another strong city, and within Rockhampton there's also the likes of another suburb called Gracemere, which has been very strong with its rental yield and growth prospects. I said I'd give you 8 suburbs with a couple of bonus areas towards the end, but unintentionally, I've just shared an extra one. So it looks like you'll be getting 8 plus the bonus of 2 plus the one I just shared with you in Gracemere, taking it to 11. So for those tuning in this far, thank you firstly. And if you haven't already, smash that like and subscribe button on the YouTube page. And if you're on Spotify or Apple Podcast, if you do love the rest of this episode, please do drop us a review and look forward to hearing from you as well on your thoughts on the podcast. Now, looking at Gracemere, that was one, but if we move over to Mount Louisa, which is the next on the list, Mount Louisa is back again in Townsville. So Mount Louisa has an affordable median price at $429,000. It's 6% rental yields with 1.2% vacancy rates, down slightly from last year's 1.5%. So not as tight in vacancy as some of the others, but still a very tight number nonetheless. Now, it's important to understand, though, that these are the rental yields that are typical. What happens is as you have price of properties above median, you'll naturally see the rental yields drop. For example, in Mount Louisa, rental yields will be high in certain patches where the prices are in that sort of 400s. But if you start to purchase a modern property, a family home in maybe the 500 to 550 price point, you'll be above median pricing, which is not a detriment to growth. There's no data to prove that. It grows well. But the difference is that you will just have rental yields that may not carry the same momentum as something in the 400s will. So the rental yields here might have are 5 to 6% rather than the 6% plus. So just recognize that the higher price point you are in a suburb, the rental yields don't always follow for the high end, but in the middle or low parts of the suburb, the rental yields follow a little. Capital growth, though, should still be fairly strong, irrespective of where you are median priced within a suburb. Now, coming back to this list again, there's a next suburb called Maddington, and Maddington is in Gosnells and WA again, and that's at 450K median price with 6% rental yields, with 0.3% vacancy rates and 0.2% the year prior. I'll back that up with one more WA property suburb, so that's Kenwick. And Kenwick is in also the region of Gosnells, and that has $485,000 in terms of median price with 6% yield. So that's another region where the medians are starting to get pretty high, but the yields still remain, which is quite strong there. Now, vacancy rates are 0.5% with vacancy rates in the year prior at 0.2. So these are the 8 core areas plus that one bonus I mentioned prior. Now, for the last 2 bonus parts where I mentioned these have been extremely strong performers for our clients and are still strong performers even today. The first suburb here is in Bundaberg, Svensson Heights. This suburb now has a median price of $430,000 with rental yields of 6.2% and vacancy rates of 0.9%, slightly up from 0.6% the year prior, but extremely low. And the last suburb is Kenwick in Bundaberg at $440,000 as a median price with 6% yields, 0.9% vacancy rates, also up slightly from 0.6. And vacancy rates similarly placed for them. Svensson Heights and Kenwick, these have been phenomenal performers for our clients. I myself purchased in Bundaberg as well not long ago, and Bundaberg has been a great success story for InvestorKit clients. Now, why is that the case? Well, it really comes down to those things I mentioned earlier. If we take a step back, there's the supply trifecta. And the supply trifecta you want in a market is where you have listings that are below long-term averages and hardly any available today, for sale of established houses. The second one is you have construction levels, and this is where the construction levels in pipeline are also low. And then the third one is a very tight rental market, right? So this is the trifecta of supply, vacancy rates being low, listings, and construction. And so what you're saying then in a paragraph is that there's not much now for sale, there's not much coming up for construction, there's not much available for rent. And this kind of constricts supply massively. The next 2 parts, though, to really give Bundaberg that boost and why it's been a strong performer, not only has it been the best in capital growth amongst this whole list for the last few years, but it's been the best for rental growth and the best for rental vacancy and speed of getting a tenant. None of these locations have performed as well as Bundaberg has over the last few years. And the reason why is it's also had a strong economy on the front end, which recovered massively, right? Not only do you have the supply trifecta, but you have the economy recovery from many, many years ago, very high unemployment that has rocketed down, similar to what's been seeing in Townsville as well. Now, lastly, with Bundaberg in these 2 particular areas, the big thing is just when you think it's grown a lot, the rental yield comes back up again and makes it attractive. Investors have not stopped pouring in. They continue to go into this market because they're looking at it and they're saying, well, what's changed there? I get that it's grown a lot, but is it still affordable? Yes. Is it still undersupplied? Yes. Is there still hardly any rental properties? Yes. Is the rental yield still high in comparison to other markets? Yes. And is there still month-on-month price growth? Yes. So is there still a strong local economy? Is there still strong lifestyle? All these things together are yeses. And that's why these 2 regions and suburbs continue to stand out even today after some solid price growth. So that is 10/11 areas given to you about suburbs with growth potential, strong rental yields, affordability, and tight rental conditions, allowing you to get the best of all worlds in a portfolio that balance all of these things. Now, there are many other suburbs that exist, and if there are suburbs that are different from this on your list, it could be more that they're in line with your portfolio and your goals, but these are suburbs that tick those criteria across all the aspects that we've talked here. So when it comes to suburbs like this, if you've enjoyed this data and you're on our YouTube watching this, or if you're not watching this, head on over, click the like and subscribe button so we can produce more videos like this and share real data on real markets, giving you some insights of what's happening across the nation in 2024 and beyond. And if you're listening to this on iTunes or Spotify, Give us a review. We'd love to hear from you on how you're finding the episodes. Give us a share to your friends and family as well who are keen to learn more about the property market in 2024 and get informed ahead.